77% down isn't cheap enough for me. I'm still a seller here. If this was pre-announcing some news to make the earnings look better, what's under the earnings? If you're giving out bad news, I don't think that means anything good's under the hood tomorrow. They're exposed to a lot of small and medium-sized businesses. They may be feeling the brunt a little bit more, as well as e-commerce slowing down because the general consumer is having to spend more on basic needs, food, shelter, gasoline, all the inflation pressures. So I am not a buyer of Shopify, even after a 15% drop. I think they're going to have pressures. I appreciate the CEO saying he got it wrong, but I don't think that means that we're going to have growth. So if you're in a high multiple stock like Shop, then you need to have, that's a tongue twister there. You need to have growth catalysts. So what's the growth catalyst here? How are they going to have a good 2022? I don't think the Band-Aid's been fully ripped off yet.
Quick follow-up to that, Victoria. Amazon is down 5% today. It's getting close back to its 52-week low. Between Shopify and Walmart, I mean, this is a 1-2 punch. Granted, they have the cloud. Does it make you want to buy Amazon because it's a very different business, or that's a big no? Okay.
That's a big no. I'm sorry, and this may be unpopular, and I may look at it like an idiot by the end of the week. I'm not touching Amazon yet. They're under too much pressure. If you look at something like UPS's struggles today, you have Walmart struggles. The only thing that's probably working really well is AWS. I know they're a little more diversified, but you have to look at some of these inflationary pressures. And if the e-commerce shift is also shifting away, and you're seeing Walmart shifting away from some of the clothing and other items into staples, I think Amazon's also going to get hit with that. So maybe Whole Foods, we've seen this luxury section of the market actually hold up really well. Louis Vuitton, and Amex, and those guys are reporting great numbers, but then you see your Walmart. So it's like Main Street is struggling. And I don't know how many other companies can say that. Walmart, Verizon, AT&T, none of them are signaling the strength in the average consumer.
Very well said. Perfect segue to talk Visa, because they're also reporting in the next 24 hours. The shares are only down about 4% this year. They've beaten EPS 19 out of the past 20 times. The only other time they were in line. Kate, what are the expectations here?
Kelly, it's so interesting. I was thinking last time I was in the office here, probably 6 months ago, you and I were talking about Visa, MasterCard, some of the big payment giants and what was going on. And then meanwhile, you had Shopify, you had all of these pandemic era darlings doing so well. That trade has completely reversed. And now Visa, MasterCard, Amex are really the safe haven trades.
Absolutely.
So interesting to see that turnaround. But Visa expectations are higher because of what Amex reported last Friday. Really strong quarter, really strong travel and entertainment spending. So if you've been in an airport lately or you're traveling at all, you've seen this kind of pent up demand. People are spending now on travel and entertainment. That is expected to be a strong segment. We'll see kind of that breakdown of spending, also e-commerce, how that sort of mix of spending, and then any sort of recession talk. Last quarter, we got a lot of commentary about the credit card companies saying that they're not seeing any signs of a recession when it comes to consumer spending and health of the consumer. What are they going to say this quarter? Is it the same thing? Inflation, and it can actually be sort of a near-term bump for the credit card companies, higher ticket prices, higher gas prices, and meaning a little bit of a payments bump. So it could be a near-term thing, but that's another topic people are focused on. Inflation, spending, but expectations are pretty high here for Visa.
Victoria, given what you said about sort of a consumer cautiousness, what do you do with Visa?
I'm going to buy Visa. And I know I'm talking out of both sides of my mouth now. I sound like a bank CEO, right? Saying everything's terrible, but we're making lots of money. No, I'm buying Visa. I think they're on track for their 20% revenue growth target. And it's all about the cross-border traffic, baby. It's all about the travel. We should see a bump like we saw with Amex. Visa is widely accepted, and we're expecting to see a lot of those cross-border flows pick up. That's a nice bump up in revenue. Obviously, consumers are still spending, and they're spending more on debt than they are out of savings. So that's another nice bump for Visa. I'm looking for about $7 billion revenue. I think they have something like $3 trillion in processed payments in the quarter. And if you look at some of their numbers that they reported earlier, I think they're going to have a good flow. And I think they're going to come on the heels of a hot Amex number. Obviously, expectations are higher. But I also like what they're doing, as they collaborate more with the peer-to-peer and they're getting into some of these more remittance payments. Visa has continued to expand beyond just, here's my credit card. And I think they're very smart on how they're doing that and how they're starting to partner with anything on crypto. And so instead of competitors with some of the fintech, they've actually become collaborators. So I see Visa continuing to be able to grow their market share. And I think it's going to be a strong quarter. Who didn't spend money in the second quarter? We all traveled.
Even if you spent it on groceries and gasoline, unless you were looking for the discount. If you did. Anyway, Victoria, we'll leave it there. We appreciate it. Kate, thank you so much. Our Kate Rooney on both of these names for us.
Shepard Smith here. Thanks for watching CNBC on YouTube.